Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to another edition of our weekly podcast. Global equities trended higher as markets cheered an extended timeline for President Trump's reciprocal tariff measures announced. Major US benchmark indices in the US rose around 1% to 2.5%. Asian equities trended higher, led by China, which rose about 7% amid the ongoing AI and tech sector rally, rising consumer price inflation, and the news of People's Bank of China pledging more easing when appropriate in its fourth quarter report. Other Asian markets like Hong Kong rallied over 4%, Korea up 3%, while India and Taiwan underperformed, falling 3 to 4%. Back home, Indian equities declined after two consecutive weeks of gain. The Nifty index fell around 2.9%, while the small cap index fell nearly 9%, falling into bear market territory amid increased global trade-related worries after President Trump announced the possibility of reciprocal trumps on trading partnering countries, while foreign investors continued to sell in domestic equities. Broader markets underperformed the large caps, with the Nifty mid-cap index down 7.4%, while the small-cap index was down 9.4% for the week. Coming to sectors, all sectors recorded a weekly decline, with energy, utilities and realty falling the most with cuts of over 6.8%, while banks, FMCG and Nifty fell the least with cuts of 2.1 to 3.8%. The bond markets had a relatively stable week. The Indian government bond yields remained range-bound over the past week, driven by declining US bond yields and the Reserve Bank of India conducting variable rate repo auction for various maturities for over INR 7 trillion during the week. The 10-year Indian government bond yield closed flat at 6.71%, while the 3-year and 5-year Indian government bond yields changed -1 basis points and +1 basis points respectively. The INR gold rose 1.8%. Brent crude oil eked out marginal gains as markets pared back supply concerns amid expectations of an Ukraine-Russia truce deal on President Trump's intervention. The INR posted one of its best week in nearly 18 months, gaining 0.7% against the US dollar to close at 86.8 as strong RBI intervention, declining US bond yields, weaker US dollar negated the impact of foreign investor outflows from domestic equities and concerns on the impact of Trump's reciprocal tariffs. Coming to the macro updates for the week, the first was on India's consumer price inflation, which fell to 4.3% in January of 2025 compared to 5.22% recorded in the previous month and below market expectations of 4.6%. The moderation was driven primarily by an acceleration in food article prices, which fell to 6% compared to 8.4% in December, largely attributable to the moderation in vegetable prices inflation, which fell to 11.4% compared to 26.6% last month. In the meantime, deflation persisted for fuel and light, and inflation remained steady for housing. On a monthly basis, the India CPI inflation fell by 1%. The second data was on India's industrial production, which grew by 3.2% year-on-year in December, slowing from a downwardly revised 5% recorded in November. The decline was mainly due to a slowdown in manufacturing activity, which fell to 3% year-on-year versus 5.5% recorded in November. Meanwhile, production rose further for mining and electricity. On a monthly basis, industrial output increased by 6% in December, rebounding from an upwardly revised 1.4% decline recorded in the previous month. For the fiscal year period April to December, industrial production rose by 4% in fiscal 2025. The final data was on India's wholesale price inflation, which rose at 2.31% year-on-year in January 2025, easing slightly from a 2.37% growth recorded in December 2024. Manufacturing prices accelerated to a 2-year high of 2.5% compared to 2.1% in December, mainly boosted by fast increases in food products, wedding apparel, and leather-related products. Meanwhile, there was a moderation recorded in food prices and primary article prices. Additionally, fuel and power prices dropped much softer, attributed to smaller drops in petrol and diesel. On a monthly basis, wholesale price inflation fell 0.45%, which makes it the third straight month of decline, following an upwardly revised 0.6% drop in December. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.